Tether Q1 profit reached $1.04 billion, while excess reserves climbed to $8.23 billion, sharpening the stablecoin reserve debate. The numbers strengthen the cushion behind USDT, but the model still depends heavily on Treasury income and future regulatory pressure. The confirmed event is that Tether disclosed $1.04 billion in operating profit for Q1 2025, $8.23 billion in excess reserves, and U.S. Treasury holdings approaching $120 billion. The reason this belongs in a crypto news read is that USDT remains central to trading liquidity, so reserve strength and earnings quality matter for exchanges, market makers, and institutions using stablecoins for settlement. The opening pressure point is Tether Post's 1.04B profit against reserve strength versus rule risk. The first confirmed detail is operating profit hit 1.04B in Q1 2025, and the immediate reason to care is that excess reserves reached $8.23B. That means the viewer should track next attestation and reserve mix instead of treating the first reaction as the whole story. The verified frame is narrow and useful. The confirmed baseline is a $1 billion operating profit quarter and a larger reserve buffer above required backing. The profit is tied mainly to yield from a reserve portfolio weighted toward short-duration U.S. government securities. This gives the viewer the factual floor before any larger conclusion is drawn. The two facts that set the baseline are clear. Treasury holdings are near 120B, and the buffer sits above required token backing. That frame keeps $8.23B excess reserves are disclosed connected to the actual consequence rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Tether Q1 profit, the mechanism is the part that decides whether the story has staying power. The mechanism is simple. High-quality reserves can earn interest while excess reserves absorb losses before redemptions are threatened. That cushion reduces counterparty risk, but it does not remove exposure to interest rates, audits, transparency expectations, or regulation. That is why the process behind the event matters as much as the event itself. In practice, Treasury yield feeds the earnings model is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Treasury yield drives recurring income, while excess reserves absorb losses first. If that hinge fails, the strongest title-level claim loses force even if the story keeps attracting attention. The impact lands on a specific group rather than the whole market at once. USDT users, exchanges, liquidity providers, institutions, and stablecoin regulators all have a stake in the result. The practical consequence is stronger confidence in the settlement layer that supports a large share of crypto trading pairs. If Treasury yields fall or rules change, future quarters could look different even if current reserves are strong. The useful boundary is that us liquidity users watch the cushion, while yield and regulation can change the model. The impact split is us anchors many exchange trading pairs and institutions watch counterparty risk. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The unresolved part needs to stay visible. What remains unclear is whether the profit and reserve trends hold under lower yields or tighter stablecoin rules. That does not prove that one strong quarter eliminates all stablecoin risk. The cleaner confirmation would be future attestations, reserve composition, redemption performance, and regulatory treatment will clarify the durability. This is the line between analysis and speculation. The unresolved split is lower yields could pressure future profit and rules may change reserve requirements. The story can stay important, while yield and regulation can change the model remains unresolved, but the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is not vague. Watch the next quarterly attestation for reserve mix, profit trend, and excess reserve movement. If the buffer grows without relying on riskier reserve assets, the story moves from attestation signal toward durability test. For Tether Q1 profit, that follow-through is the test. The trigger split is reserve mix is the next detail to inspect, and profit durability matters more than one quarter. If that trigger does not arrive, the story may stay in attestation signal longer than early attention suggests. If it does arrive, durability test becomes easier to evaluate with facts instead of assumptions.